Hey, everybody, welcome to this episode of Founders on Finance, where we interview founders of interesting companies and learn how they think about finance, from raising rounds to managing cash. Today, our guest is Jacob Sheldon, a SiliconCFO. Jacob's been a part of multiple startups and already has one exit. Jacob, thanks for joining me, man. Why don't you give everybody a brief intro about yourself and what you're building at SiliconCFO?
Thanks for having me. So my name is Jacob Sheldon. I'm the co-founder and CEO of SiliconCFO. And really at heart, I'm a startup person and a builder. It's been from sandcastles as a toddler to websites in middle school and high school, solar panels in high school, and then into startups in college and beyond. So I've really always been a builder and now really focused on building startups from scratch. SiliconCFO is my company at the moment. We are building a marketplace for fractional CFOs, for startups and SMEs to hire fractional CFOs. We're also building SaaS tools for fractional CFOs to help them better manage their clients.
Perfect. That's a great intro. I want to take a step back. I know we've talked about this. I love your origin story, if you will, right? Your very first company was called MicroJobs. It was also your first exit as a 15-year-old, right? Why don't you go ahead and explain to everybody what MicroJobs was and how you came up with the idea?
Yeah, so this was sort of early high school for me. I had been selling a bunch of things on eBay, really into sort of drop shipping at the time. And I had been building websites, even just sort of WordPress blogs, getting into building websites from scratch. And Fiverr was starting to become really popular at the time. But at that time, it was still only $5 per job. You had to order sort of multiple jobs in order to get the price up to more than $5. And I thought that was really, really restricting. So I did a lot of research and found some alternative sort of Fiverr clones out there that were really similar looking to Fiverr, had all the same functionality, but you can customize them a little bit. And they're pretty inexpensive to buy this sort of template. And so I decided to create a Fiverr clone called MicroJobs Online that was allowing people to sell their services for $500 to $500. And so in sort of about 9 months, I had launched this website. I got to try out this idea of marketplace management, getting both sides of the marketplace on this platform, and really trying to grow some revenue on the platform. And after about 9 months, I had learned a lot about marketplace management, about customizing websites and more about building websites and front-end web development. But I realized I didn't want to be building this website long-term and building this business long-term. So I found that these Fiverr clones were selling online for, at that time, it was a decent amount of money for me as a freshman in high school. So I decided it was worth it to try and sell it. And there was the bidding price and people would bid on it. And then there was the buy it now price, so sort of similar to eBay at the time. And but it was for selling businesses and websites. So someone ended up buying it for the buy it now price. And so that was, in a way, my first exit of a business or a website that I had built. And only after about 9 or 10 months from starting it. It wasn't a ton of money, but it was enough to save a little bit and buy a laptop for myself.
I love that story, as you know. I tell you all the time, every time we talk. And it's obviously like the seed to what you're building now, which is super cool. So I love sharing it. Thanks. I really love it. One of your next endeavors, if you will, was part of a cookie business or a cookie startup dessert business. Two things there that I always like to talk to you about. You raised money there via Kickstarter. So question number one is, what was your experience in raising funds on Kickstarter? And then two, do you think the marketing is actually more important than the product itself?
Yeah, sure. So this cookie company that I joined while I was in college. I came in and immediately was sort of an operations and finance person for them. I've always had a knack for finance, and I did well in my accounting class in high school. So I came in and cleaned up their books and helped some with the operations. But when it came to increasing sales, I thought that a Kickstarter campaign would be a really good way to jumpstart sales numbers. And so that's what we did. We spent a lot of time and effort on this Kickstarter campaign. And fortunately, it was a success. But it is very, very tough to run a crowdfunding campaign. And this was my first real introduction into crowdfunding. It takes a lot of planning and a lot of effort during it. And you're right, there's a lot of marketing involved. And regarding sort of the marketing versus the product and which is more important, I think that as long as you have a consumer-oriented product that people find cool and will use, then the marketing becomes more important after you have that. You still need a base product that people are going to be interested in. But I believe with any crowdfunding, once you tap your personal network, it's all about marketing.
Right. And that's also a great building block, right? You start with marketplaces, you did this, and then your next step is you have such a great logical progression for everything, which I love. That's why I love your story. The next spot was Slice Capital, equity crowdfunding for startups, right? So you had a background, CFO, then CEO. You ultimately became the CEO of that company, right? So what is your view around equity crowdfunding for startups? Is it better, worse, plain not just different than the traditional routes of VC and angels? What's your view there?
Yeah, sure. So first off, regarding Slice Capital, I joined it very early on. Before we were an equity crowdfunding platform. We were still building it, trying to get our FINRA and SEC registration, and eventually becoming CEO. As the previous CEO and original founder had to step down, I immediately went into learning a lot about the compliance and making sure that the company was compliant, and then trying to grow the company as well, alongside raising some funding and doing more sort of operations and bookkeeping cleanups. And throughout this whole process, I think I was CEO for about 9 months. My understanding of the equity crowdfunding space is that equity crowdfunding is actually really great for startups, but it is incredibly hard for a platform to succeed in the space unless you have sort of a very different take on the space and how you're doing things, which is especially hard to do when it's a pretty regulated space.
Right.
When it comes to sort of the idea of companies going to equity crowdfunding to fundraise when they've sort of tapped out their other fundraising channels, like the traditional VC and angel and syndicate routes. From what I've seen, that is very often the case, where they see it as a last resort and it can be subpar deals. More recently, I've been really interested in what's been happening in equity crowdfunding with some startups going there to really just give their customers a stake in the company, and make them more loyal customers for the longer term. And as well, seeing funds raise on WeFunder or Republic, on just equity crowdfunding platforms, to let just the non-accredited investors and smaller investors get a piece of a fund that's investing in startups or something else. And that's been especially interesting to me. I've talked to a number of experts about this idea of only subpar deals on equity crowdfunding platforms, and they strongly disagree with it. And I only partly disagree with it. There are, as with any sort of deal flow channel, if it's cold outreach, or if it's inbound. As an investor, you're going to have a combination of subpar deals and the better deals and the top deals. And so it's the same with equity crowdfunding. You see a combination of all three. You see some really awesome deals. You see some pretty good deals as well. And then you're also going to see a lot of subpar deals.
Right. I mean, as an investor myself, I've looked through a whole bunch of them. I've actually also used them myself. I wrote a blog post, which me and you talked about briefly previously, around how people can use them to actually start getting in the investing game. And I think you're 100% right? Even if you're on, name names, Angel List, or any other syndicate or whatever, everybody's going to see good deals. They're going to see bad deals. And it's ultimately, we don't know what's going to happen until the end game. So, eventually we'll probably see a substantial large exit from a crowdfunding company, I imagine, but yet to be determined as far as I know. Do you know of any?
Not off the top of my head.
Me either. Yeah. Well, over time, everything will play out. Let's shift gears.
It's still very new.
Yeah.
So it's hard to really see what the exits are going to look like.
Yeah, absolutely. Worst case scenario, it's another great place for people to get funding when they can't get it, right?
Yeah.
Let's shift gears. Let's get into your current thing, SiliconCFO. Explain to everybody what the opportunity was. I get it from your background, but explain what the opportunity you saw was and why you started this particular company now.
Yeah, so SiliconCFO, I started a little over 2 years ago, initially as a brand around the consulting that I was doing at the time. After I left Slice Capital, I was really a fractional CFO and fractional controller for some early stage startups and agencies that were in my network. And SiliconCFO is a great name for that. But after maybe 6 months to 8 months of being a fractional CFO myself, I was already looking for what my next startup was going to be. And it turned out that there are tons of fractional CFOs and fractional controllers out there looking for work at startups. I posted a job listing on AngelList, and I got hundreds of responses, and that really blew me away and showed me the supply side of this space. So I decided about a year and a half ago to try out a marketplace model. And about a year ago is when it really started picking up. It really feels like, and felt like, and to this day still feels like a recruiter, a free recruiter on the startup side. But in the back end, it really works like a marketplace where we have our pre-vetted fractional CFOs. At this point, there's about 270 of them in our talent pool. And on the other side, every week we match them to startups and SMBs. And so we're a marketplace for fractional CFOs. We are in the next month, 5-6 weeks, launching our marketplace platform so that it doesn't feel like a recruiter anymore, and it actually is a proper marketplace. It's what we've been working on to really take this to the next level. And our plans for after that are for building tools for fractional CFOs and fractional executives as a whole, SaaS tools that help them with better managing their clients. So that's on the tool side for helping fractional talent even more. And regarding the marketplace, we intend to expand it outside of CFOs and into fractional executives as a whole.
Very interesting. So start with one silo, if you will, and then start branching out from there with the SaaS product, kind of the wrapper of all the greatness.
Exactly.
Perfect. Let me ask you this question. You've been a founder. Obviously, you're in this space now. Founders are cost sensitive. A lot of times they don't want to go ahead and start bringing on talent either internally or externally. What do you see, or what's your opinion on when they should start thinking about bringing on a fractional CFO or maybe even a full-time CFO? Do you have any opinions on that, or what you're thinking?
Yeah, it depends on a lot of factors, including how much finance and accounting work there is at the startup. And that depends on the stage, the size, the industry that they're in. And it also depends on how much finance and accounting work the founders can do comfortably themselves. Or even if they're comfortable with managing a bookkeeper and a controller, or even just a bookkeeper or a head of FP&A. So what I recommend is that companies at least start talking to some fractional CFOs that would be ideal for them from a very early stage, even after raising a pre-seed round, but especially after raising a seed round. You want to have these fractional CFO options in your network so that when the time comes, you can bring one on board, even for just a couple hours per week for strategy sessions and for checking in on your controller and your bookkeeper to make sure that everything is being done correctly. And then you can start to ramp them up to working more hours per week and managing more of the finance and accounting function to the point where you as a founder don't have as much work to do on that and you can focus on growth.
Sure. And I imagine obviously it takes it's more of like a very long or quasi-long dating process, right? Between matching both sides up, over time they have to figure out how they gel and if they're the appropriate fit and all those types of things.
Yeah, and before SiliconCFO existed, before our marketplace was up and running, most people would find their fractional CFO for their startup via referrals, or they would have to post a job listing, which very few founders end up doing. So they would be Googling around and they would be posting on LinkedIn and in private communities of founders asking, oh, do you know a good fractional CFO for e-commerce startups or for fintech startups, and or for helping with fundraising at this stage. And so that really limited their options of who they're going to find. It's just who could they get a referral to. So our goal with SiliconCFO is to give them more options and to really decrease that time to hire a fractional CFO. And so when a company comes to us, we tend to match them to some fractional CFOs and introduce them to fractional CFOs within 3 to 5 business days. And from there, it can take anywhere from a couple of weeks to hire someone to however long they want to take.
Right, makes sense. Takes time. I know I can speak for us personally, right? We always have a core group of fractional CFOs that we like to deal with, and I've been sending them all to SiliconCFO to let them start leveraging you. So hopefully I was the one that took you from 250 to 275. Well, we'll see about that. Possible, right? Well, we're coming up near the 20-minute mark here. Let's try to wrap it up a little bit. Let you get back to doing what you're doing, building over there. How and where can people connect with you? SiliconCFO website, email, socials, wherever you think it's best to get in contact with you and the team.
Yeah, if you're a founder or CEO and you're ready to hire a fractional CFO and you just need introductions to ideal candidates, then you can go to siliconcfo.com and click the button to book a call with me, and we can chat very soon. If you're just looking to talk with me or connect with me, I'm on LinkedIn, I'm on Twitter, and you can feel free to email me at jacob@siliconcfo.com.
Fantastic. All right, for anybody out there, like Jacob just said, if you're looking to possibly bring on a fractional CFO, or if you're a CFO looking to get access to more potential clients, reach out to Jacob and the team. They'll definitely be able to help you out. I think it's a great product. I love watching how it's growing, continue to be happy to see it continue to grow. And I'm definitely going to talk with you again, Jacob, in the future as you continue to build. Thanks for coming on here. Always enjoy talking to you, man. Thanks for everybody listening. Have a great day.
Thank you.
Bye.